Hi, good evening, everyone. So let me start. Okay, so our topic for today is decoding the surgical strike on budget day. I have given it the title as a decode. The reason behind is the platform which was built and built totally on domestic volumes. We were lacking FII participation because this Indian market is more or less, if we look at it from FII perspective, they use it as a hedge tool. And domestically, we are more popular since 1992, making histories, making record, making volumes, driving counters. So it's more or less it's a built up rally based on liquidity. And if we can pair it with the recent 1.5 2 year run from 7,200 till 11,400, which I predicted well and way before time, we have actually hit the target before time. I was expecting this near the uh, end of BJP general session, but somehow this rally participated well. It's all because all the other asset classes were not giving return, and that was the euphoria which got carried. People got carried with this euphoria, and people started investing in. So that's how we went till 27 and a half in terms of price earning, wherein we averagely stands between 19, 20, and 21. So we were totally overheated, and this was all controlled, well controlled, all news driven, all manipulative, we can say. So things are now started falling down because earnings are not able to catch the rally. So understanding this, you can name it as a surgical strike because this government BJP is well known for giving surprises. So this was a surprise, although we there was round of some money control articles wherein Arun Jaitley was saying that there is no sense of introducing. I mean, this was something 2 3 days before this article was floating that they are not introducing, but somehow it got leaked and this was well informed. uh, so let's try to understand this how this thing is built up. Uh, as far as Indian market is concerned, most of this institutional investors, they usually they're not they don't get carried away with the style, the pattern which we have in India. This is basically a proven record. We can understand in a way that this rally, I mean, if we call it 1992, 1997, all those 2007, 8, all those rallies are good at the top, but they are bad at the bottom. So if I explain it in a manner that if there is a buyer at the top, there is no buyer at the middle, there is no buyer at the base. So if we sell it, there is no depth to market, and there is a sudden crash in Indian market. The reason behind this is the lack of real money into Indian system. Okay, so these books are usually funded through brokers, through HNIs, and these channels are somehow, it's these are the hollow channels, and they are actually not able to sustain even a minor crack. So that's how it happens. The live case is PC Jewelers that we'll discuss is later. This is a front example which we have seen in last 2 days, that how these rally usually fakes on. So understandingly, if we see the behavioral psychological base of a trader or a short-term investor, they just try to play leverage with the money. I am talking about retail and HNI. Understanding institutions, they are usually they play usually on a hedge pattern. So they are not uh, trading this whole game as a manipulative game, but they usually hedge their position. So we have, as in participants, we have retailers. Usually we call it emotional cracks or emotional fools, who don't earn money just because they don't understand the larger picture. They understand shorter picture and just they try to leverage and they lose money. So they are the 100% losers. I'm talking about retailers. Then we have HNIs. HNI, they try to show power of money, but power of money against manipulators, against manipulators is weak. So we have retail, HNI, institution, and the last category, which actually moves the whole screen, we make it as a market makers. So what's the role of market makers? So market makers are those who controls the script, who has maximum quantity as against retail public, and the rest is being controlled by promoters. So if the promoter has say 75% of equity controlled, rest 25% is there with the public. So market maker will try to control 15 to that 20% of equity to make it a controllable screen. So we have well examples of PC Jewelers and Infibeam. The market makers are controlling the screen, and they can drive the script the way they want. So these are all market makers. They influence the prices as per their plans. They do their homework well, and these are all funded books. Right. So, just to make it, more clear, when I have always spoken at the back that whenever there's a volume built up at the back, I'm talking about at the back areas and the bottom areas, and whenever there's a room for euphoria, these market manipulators, they just try to fund their books. They collect the deliveries, they park the deliveries to the brokers, they get the books funded, and they start picking the shares. So the values at the collateral also keep increasing. At the same time, they got the power of money and they keep on increasing the price of the stock. So if we understand this whole game is actually baseless, because there is no real value buying is happening in this script. Okay, so in 2 years, if we calculate, I mean, from 2008 to 2016, I mean, we were nowhere. We had FMCG, we had pharma rolling on, and other sectors were all silent. What happened all of a sudden, this rally started participating, and we moved from 10,000 to 11,500, almost 300, right? So this was whole the whole participation was liquidity driven. The starting of BJP move was to get the foreign money in. So maybe all those understanding built up between the corporates, or maybe the foreign money which was lying, that was maybe routed through channels of Singapore, Mauritius, or maybe other gateways, wherein money started pouring in. So that's how the liquidity, which has given a support from 7, 8,000, 9,000, and then the real, spark was given, the advertisement was given, and demonetization thing happened. Then we have GST thing happening to make it more attractive for an FIIs. But if you understand FIIs have already sold in last 1.5, 2 years. They've been selling. They're not net buyer. It's off lately. They started buying. Otherwise, the DIs were participating. Rest, I guess, the moment we've broken the 10,000 level, that was more a retail participation, mutual funds inflowing in, right? And then we rallied, like anything. That 1,000 points came in within no time, and we were like 11,200. Now, just to understand that, as we were expecting, from the government, a populist budget that was expected on full lines, because they have to prepare for a election, next year. So if they have to prepare for an election, they need money. They need to actually, give a bread butter kind of thing to all the small, category people, the farmers or the local general public who's going to vote. So it was more of a election campaign, which it did, and at the same time they actually wanted to book their profit. Okay, so since the whole euphoria was built on liquidity, right? Everything was created well. At the same time, mutual funds were giving it good kick in. So what are these mutual funds? Mutual funds actually carries retail money. Okay, so they carrying the retail money, at the same time they're booking their their fees well, that 3.5, 4%. They're not worried about the performance, but they're worried about a long-term plan. So people who all are invested for 5 years, 7 years, there is no kick. People who started investing at higher NAVs, probably post 10,000, 10,500, they may actually get hit. So the idea is to get the retail HNI money kicked in. Operators are, well, if I can show you a daily chart pattern of a Nifty, you can very well make out. Okay. So that's the red line, which is above the Nifty. This red line is the mid cap indices, and the lower candlestick pattern. This is Nifty. So you can see that mid cap has given a divergence as in Nifty was rolling up. So we all know that why Nifty was moving up. Nifty was moving up because of all large caps which were performing. So you can name it Reliance from 900 went to 1800. I'm talking about, I mean, it has given a bonus, but although it is standing at 1900, then we have HDFCs, we have ICICI, Axis Bank. So the participation, the rally, the contribution was all with the large cap, but mid cap distribution started way well on time, just before the news only. So we can easily read that these market manipulators, they have their insider news in place and they are ready to play. That is why I keep focusing on technicals, that people should actually learn technicals, because at least it gives you a picture well before in time that something wrong is going to happen. If you can see the messages in my groups, I have given a caution, don't buy. And it was the time when Nifty was trading at 11,000, maybe 150 or 200. I have given you that that's the peak level. We have discussed this before also, that we are peaking out. We are peaking on the channel. So please don't leverage, at least book your profit. And same thing has happened. I was lucky enough to sell my portfolio, although I traded on the negative side as well, since volatility got increased and I got many opportunities to play in between. So the idea is that this Indian market is not similar with the foreign market, because this Indian market is a hollow market which actually stands in the hands of manipulators, and we need to read the volume charts. We need to understand that what is the behavior pattern. Okay, so the logic got cracked when we were actually peaking out at 27 and a half PE, and earnings are not able to catch it. So the moment there was a strike from the government that we are introducing 10% long-term capital gain tax, the first day was silent to calculate the portfolio, that what we have to sell. And the second day, actually, it followed like a bullet. There was a race between the mutual funds, there was a race between operators. There's who was the one who want to sell first, okay, and book the profits. Because we have already peaked on valuation, that doesn't make sense that since we have bought 6 months back, we can carry it to June 2018. So this is well said, marking from the operators, that these are the peak values, and if somebody wants to get out, this is the first thing you should get out. And operators have already distributed. I mean, if you could just see, I mean, if in this fall, the 20% portfolio was already sold off. So these were the manipulators, and the rest is being triggered by the mutual funds. Okay, and that's how we got a big sell down. It was a series, it was a cycle of mutual funds, it was a cycle of HNIs, it was a cycle of retail investors which got kicked in. So if I can rest, these are the areas. This is a long-term trend line which is coming on Nifty, and this is the middle line which calculates about 10,528, 618. It's going to be first support on a MACD, on RSIs. If we calculate, we are already got heated, and we have shown a first sign of reversal on a daily chart pattern. You can see first leg, and the momentum is losing as well. So if we calculate this whole story, we understand very well, that the information was well in hands of operators. They got the news well before, which we can see at the first sign. We have seen the divergence here, this area. and Nifty was rising even that time. So we would have, actually calculated this, that this game is now ended, and the strike which is stabbed into the stomachs of retailers, because retailers are the person who actually trade on their own. Retailers are the person who actually invest with mutual funds, and mutual funds are, again, it's a replica of retailers. Okay, so it's a hit again, and I think that this rally continuing forward for next 14, 15 months till we have that general election, we are going to correct. Every month you can actually calculate, standing at 10,500, we are actually moving down to 9,000. So every month 100-point correction is possible, but this is going to be a poisonous correction. If I'm terming it as a poisonous correction, that means every day if it will move 100 points up and 140 150 points down. So this is going to be a trader market. I can categorize this as a traders market. All those professional traders will make money. Traders who actually behave on screen, they trade on screen or looking at emotions, they're going to lose heavily. There is nothing left for investors now for a short term till we have that investors book, because it's not that Indian rally got off. If you see, we have participated. You can check Dow Jones, you can check other markets, they have started reversing now. So we need a time for consolidation. Short term, we have made a high, because particularly this I'm talking about, we need another 2 years to break this high. Okay, if you're breaking it, we need earnings to follow. Okay, there were technical gaps which I have been pointing out, and that technical gap has to fill. This is the first gap. This first gap stands out to be around 10,400 and something, 480, 495, which I think should fill well on time, maybe this week, coming week. And I'm talking about this gap. This gap is an area wherein we have a gap somewhere around 9,000, some 8 to 10 points gap. So this has to fill, and we have other gaps already filled at the bottom. So this gap will be filled maybe during elections time. We are going to spend some very good range bound period. So all those I would advise to traders that you have to trade very professionally. Don't get carried away with the volatility, because it will hit. Now, since long term and short term both carries same tax, okay, so there is no difference. And I think that we are going to actually get the volatility in place. So it's a shift of investors. The investors who got invested at 9,000, 8,500, 9,500, they have booked their profits. So we need to correct 50% from the bottom, at least to get new investors in, so that we buy the values at the correct point. So if we say from the peak, most of the stocks have corrected 25 to 30%. That attracts us well. What we need is a panic sell, which gives a 40% discount on a portfolio. So all those members who are with me investing in a value X, we will start buying from Monday onwards. We got the calculation well. We actually did not buy at the peak. Now it's a time that we are buying 40-50% discount stock, and we're gonna invest it. Although we'll not be holding the stocks for a period. I am looking for some 10, 12%, 15% aggregate return on a particular investment, and we'll keep on rolling our trading bets, because downside is pretty open at 9,000 level. Why this rally will not move forward? The reason behind is that you have short-term tax to pay on, you have long-term tax to pay on. If you're holding the portfolio, even you have 10% straight away to give to the government. At the same time, as I told you before, that all these stocks move on the funded books. So if all these moves on the funded books, that has a cost, and it has an average cost from 14% to 17% within every broker. Okay, so 10% plus 14 plus 17% whatsoever, if you make it 25% as an average cost. So if the cost is 25%, that means they have to rally the stock to some 50%, or maybe some 70, 80%, standing at the peak at these level. I don't think that the valuations are so attractive that we carry on a performance basis, we carry this Nifty or a Sensex to 70, 80% return. So the idea is there is no funded books. There are no one to actually take this rally up. This whole rally was derived from the domestic money, and foreigners were actually they were out from the screen. Maybe they can get back with this fall. They will start purchasing in to get their equity what they've sold in 2.5. Story remains intact. Long term, we are trading for 12,000, 13,000, 14,000, maybe 18,000 Nifty. It is there in place, but there is a restructuring required at this point in time, and this will take some time to actually prove its performance back. So that's the logic on Nifty.